trend over the past couple of days. Overall, even the large market cap stocks have been getting hurt. So we've got an important question in the chat that I want to start off discussing, and it comes from Tim Boone. So good morning, man. Good morning, Greg. Good morning, Max Pierce, Leonard, Rocky Mountain Gobblers, and Silver. Good morning, everybody. We're going to start off talking about Sundial stock because a lot of people I know do come to the channel for that. So we're going to talk about Sundial very briefly before we get into the more general market news. But there is a worry that Sundial is going to be delisted in February because it has been trading. If we pull up the chart, we'll pull it up right here over the SPY. It has been trading below $1 for some time, right? And obviously, stocks listed on the NASDAQ have to maintain compliance. They have to be trading above $1 for 10 consecutive days every now and then so that they can maintain their listing on the NASDAQ. And Sundial has not been trading above $1 for quite a while now. So come February, there's a potential delisting risk, right? Now, as for the question, do I think it will be delisted or if they'll do a reverse split? I don't think it will be delisted. I think they'll probably do a 180-day extension because that is an option, right? As long as the NASDAQ approves of it. And even if they don't, they can still appeal the delisting decision, and that will still give them a little bit of extra time, right? They have some time to send out a letter and whatnot. Will they do a reverse split? Probably not, right? I don't think that would be a smart move. On Sundial's part, I think that they would probably prefer to keep all of the shares, the share count as it is, right? If you look at the share count, it's already rather large on Sundial. I'll pull up the share float right here on Yahoo Finance, just so you guys can take a peek. It's already fairly large. I think they would rather avoid reverse split if they could. If we pull up the statistics for Sundial right here, if it would load, we've got a float, let's see, of about 2 billion shares. So I don't think they want to turn that into 4 billion. I think they'd rather avoid that. So, or is that how it would work, actually? Hold on, let me think about this for a second. If you do a reverse split, then they would take the shares and consolidate them. So actually, I guess they would be turning it into a fewer number of shares. Maybe that would be decent for them over the long term, but I think it would alienate a lot of the investors who did get into Sundial. So they probably want to avoid that, right? They just got all these Alcana investors who are about to get a bunch of Sundial shares, and they probably would prefer not to see their share counts get cut in half. Reverse splits tend to not do great for companies. Like you said, Tim, when NAKD did the reverse split, it sank fast. I think that people tend to not be big fans of reverse splits. So all in all, I don't think they're going to do that. I think they still have a share buyback that they can do of about 100 million shares. I think that these small market cap stocks are long overdue for a recovery, right? They've been getting crushed for a long time. I think that they'd much rather just have the price move up over $1 over the next 180 days if they can get the extension. So that's what we're looking at with Sundial. I'll pull up SPY real quick. And you can see that SPY was actually making, looks like potentially new lows in this downtrend. I think if we pull up the 30-day chart, we can see it. It was making new lows over the past 30 days. So in the after hours, they did end up making new lows overall regarding what they've been doing in the past. So if you look at the yearly chart, there's been a bit of volatility lately, and they did make some new lows in the after hours. That's not available on this chart. But unfortunately, or fortunately, they have been in a little bit of an uptrend ever since then. So we're looking at potentially good news for the SPY, right? We're going to talk about what happened yesterday and what happened this morning. We do have some interesting news that came out just at 8:30 today. The initial jobless claims just came out. So I'll pull that up. Unfortunately, they weren't great, right? We were forecast to have 220,000 new jobless claims. We actually got 286,000. And this, if you zoom in on the chart to see what we've been doing more recently, is actually fairly bad, right? We've had fairly low jobless claims. We actually made a record since, I think, 1969. I believe it was this month right here. It was the lowest since 1969 when we only had 188,000. Now we have about an extra 100,000 piled on top of that for 286,000. So we are getting more and more jobless claims as time goes on, unfortunately. It seems like there might be some more, shutdowns and people calling out sick and some businesses struggling due to the rising number of virus cases that we've had lately. Hopefully it won't have too long of an impact on us. We have looked at the case counts in the past, and we can pull up the CDC case counts real quick. And from what we saw last time, it was falling, fortunately, right? The average was falling, so hopefully that will still be the case. Hopefully we won't have rising cases. Well, it looks like we might be in for a little bit of a rebound. You can see case counts, the averages are starting to rise a little bit again. Over the weekend, not many people get tested, I think, and it does tend to bring the average down a little bit. So maybe we'll see this rebound and make new highs. Hopefully not, though, right? We're hoping that we're reaching a bit of a peak case count-wise and that we can finally put this whole thing behind us, but we'll see what happens, right? It's still obviously having an effect on the economy. So overall, not too much to worry about, right? But something to keep on the back burner in our minds, right? A little bit of worry about the case counts rising. They are already, pretty close to record levels, so it's slightly scary, right? We don't want more of that. Now, something else that we've got at 10, it's not coming out yet, but at 10 o'clock we'll get existing home sales, so that'll be a good indicator for what's going on with the real estate market. And then at 11 we have U.S. crude oil inventories. Might give us a little bit of an insight into what's going to happen at the gas pumps in the near future, right? We might see higher gas prices if inventories are much lower, right? If they've had to dip into the inventories and take out a bunch of extra barrels, if there's that much demand. Or if inventories are higher, then maybe we'll see some lower gas prices. That's what I'm hoping for, right? I don't want to pay more at the gas pump. I'd rather pay less. So now we have to talk about what happened yesterday. We had Biden giving his an annual meeting, right, after his first year in presidency. To mark the 365th day of it, he gave a discussion with some news organizations. He did a little conference, and unfortunately, a lot of the remarks from the public were bleak and discouraging. So overall, he's not been doing too good approval rating wise. We've seen 6 in 10 people disapprove of his handling of the economy, and more than half give him a thumbs down on dealing with the pandemic. So overall, unfortunately for him, his approval ratings have been falling quite dramatically. And, he said some things. We're going to watch a little video of a little part of the conference regarding some of the more relevant things that he had to discuss, mostly regarding Putin, Russia, and the potential invasion of Ukraine, right? For those of you who don't know, Russia has a bunch of troops, about 100,000 Russian troops positioned on the border of Ukraine. This happens from time to time. I remember a couple of years ago, I was watching the news and this same kind of thing was happening, right? Russia positioned a bunch of troops on the border of the Ukraine and said it was a military exercise. So, it's happening again. Russia has a bunch of troops and they're saying it's just a military exercise, right? They're not admitting that they're denying, in fact, that they're preparing for an attack against the Ukraine, but it certainly seems like they are, right? And this is something that we deal with every couple of years, apparently. Russia wants to poke at the U.S. and see if the U.S. and NATO will do anything to stop them from invading Ukraine and taking that territory. Unfortunately for the Ukraine, it's not a part of NATO. Now, what we heard Biden saying at this press conference, right, because obviously the United States has an interest in protecting the sovereignty of the Ukraine. They don't want Russia to invade it. But obviously, we don't want too much of a conflict with Russia either. And so Biden's remarks, unfortunately a gaffe, potentially, people are saying it's a gaffe, may have inadvertently revealed the truth about his Ukraine policy, right? So in this interview, he discussed, some of the repercussions that would occur if Russia was to invade the Ukraine. And he did say that only a minor incursion into Ukraine, Russia might not face devastating sanctions for doing. And we actually have a video of it happening. So we'll see what happens, right? The reporter actually ends up asking him for clarification on the issue to see if he was serious when he said that or not. And we don't get the most satisfying answer, I'll admit.
Russia
so here it is.
Will be held accountable if it invades. And it depends on what it does. It's one thing if it's a minor incursion and then we end up having a fight about what to do and not do, etc. But if they actually do what they're capable of doing with the force amassed on the border, it is going to be a disaster for Russia if they further invade Ukraine.
I wanted to follow up briefly on a question asked by Bloomberg. You said that Russia would be held accountable if it invades, and it depends on what it does. Are you saying that a minor incursion by Russia into Ukrainian territory would not lead to the sanctions that you have threatened? Or are you effectively giving Putin permission to make a small incursion into the country?
Good question. That's how it did sound like, didn't it? The most important thing to do, big nations can't bluff, number one. Number two, the idea that we would do anything to split NATO, which would have a profound impact on one of Putin's objectives is to weaken NATO, would be a big mistake.
Okay, so that was a clip from the interview. And, when the reporter asked him about if he was serious or not, when he said that, he just kind of brushed it off and said, it seems like I said that, and then continued to talk about NATO. So it wasn't really too much of a clarification on the issue, unfortunately. It seems like, maybe he's admitting a little bit that he doesn't want to start a full-scale war with Russia if they just do a minor incursion, which is unfortunate, right? At least for the people in Ukraine who don't want to be invaded. So we'll see what happens on that front. Hopefully nothing too bad will happen, right? Because whenever there's a war or some kind of conflict like this, it tends to not bode the best for the stock market, right? People get very fearful. They want to start holding cash. They start selling their assets and whatnot. So it is a little worrisome, right? That something around the corner could be cropping up, war-wise, and that really could have a negative impact on the stock market, right? I don't think that people have really priced that in yet. A lot of people, obviously this kind of thing has happened in the past. I think that people aren't thinking about it all that much in terms of what might happen with stock prices because it does tend to just be nothing. But, all it's going to take is the one time when it's not just nothing, when there actually is a war between, the United States and Russia, another pretty powerful country, I would say. And that could have a real negative impact on a lot of these stocks, right? Especially the overall market. So you'd probably see the S&P drop quite a bit if there was an actual war. I mean, it would probably be worse for the economy, in my opinion, than the pandemic, right? You saw the stock market drop dramatically when the pandemic hit. It would potentially be worse than that, right? If there was real damage being caused to, U.S. territory or whatnot, who knows? Hopefully that won't be the case, right? It seems like a relatively slim outcome. I don't think either country really wants to go to war with each other, but Russia would certainly like control of the Ukraine. So we'll see what happens on that front, and hopefully we won't see the stock market be too affected by whatever the outcome is, because I can't imagine that any outcome is going to be great for the stock market, right? So we'll see what happens with it. Now, speaking of Russia, we have to talk about Russia and crypto, because Russia is actually one of the largest crypto miners in the world, but the central bank is proposing banning cryptocurrencies and crypto mining, and that's very scary for a lot of people to hear because, once again, Russia is the world's third largest player in Bitcoin mining, right behind the United States and Kazakhstan. So we will have to see what actually ends up happening in Russia, right? They considered banning it originally, but in 2020 they decided to give it legal status, right? They decided to let people legally mine and use it, but they banned the use of crypto as a means of payment, right? So you can hold crypto, but you can't use it to pay people, and you can also mine it. So we'll see what actually happens with this potential entire crypto ban, right? Other notable countries such as China have somewhat banned cryptos, and we'll see what happens with Russia because they currently are the third largest miner. Now, that could actually be beneficial for some crypto prices. The reason being, if people aren't mining as much crypto, then there will be less supply and potentially the price will rise if the demand stays the same. Now, obviously, a lot of people in Russia probably hold some cryptos, and, that could mean there's a great lessening of demand, but they are the third largest miner in the world. So overall, it could have a beneficial effect on some of these cryptos. If we look at Bitcoin, we're sitting around 42,000. It looks like we are continuing to use 40,000 as a support. Fortunately, we have not dropped through that yet on the latest downtrend, though we are down notably about 33%, right? About a third of Bitcoin's value has been lost over the past 3 months when we were at highs of 66,000, 68,000 actually. So we'll see what happens with Bitcoin and the cryptos if this Russia news has any significant impact. I mean, obviously, if it becomes a much more real possibility, if we actually see Russia seriously considering banning cryptos and getting close to it, you might see an exodus of all the crypto mining companies trying to sell their cryptos, and people in Russia who are holding cryptos trying to sell them and get actual cash real quick because they don't want to be stuck holding some illegal asset, right? So we'll see what happens with that. Maybe we'll all have an opportunity to get some cryptos on sale if that happens, right? We'll have to see what happens with it, but hopefully they won't ban cryptos. The more people who have access to them, probably the better over the long term, right? You don't want to see, the U.S. become the last country in the world that has legal cryptos, because then you're limited to only the 360-ish million people who live in the United States, adding to the liquidity pool. So hopefully that won't be the case. Now, what else we have is a very interesting story, actually, about Amazon. So I know a lot of people are probably invested in Amazon stock one way or another, right? Either they own the stock itself, maybe they own an index fund like the S&P, maybe they have a mutual fund or a financial advisor who's invested in it in some way for them, right? So Amazon is one of the biggest companies in the world, and they've actually got a pretty exciting announcement. Now, if you look at the past year, they've not been doing incredibly well, right? They've actually been relatively stagnant, right? There's been some volatility, but they've pretty much just been bouncing just above the $3,000 level, right? Not quite getting to 4,000, just kind of bouncing in the threes for the past year or so. And that's, surprising for a lot of people because Amazon over the past has been doing quite well, right? Over the past 3 years, they've just about doubled, but the past year, 2021 was not the kindest to Amazon, unfortunately. Now, it looks like they're trying to turn this around, and they're doing it in an interesting way. They're opening up real-world clothing stores with high-tech fitting rooms. So this is actually, it sounds like a pretty interesting idea. So I was looking into this a little bit, and they're launching a new apparel company called Amazon Style, and they just announced this today, actually. So the first location is going to be based in Los Angeles suburb Glendale, so in California. So it might be a little bit higher end, but they did say that they wanted to have products that meet everybody's price point. So they said in a quote, "You'll find everything from the $10 basic to the designer jeans to the $400 timeless piece." So it looks like they're trying to make a one-stop shop for clothing, and the way that they're going to do this is pretty interesting because typically, if you have a store, you have to specialize what kind of clothing they're going to have because there's only a limited amount of space in these stores. So they're looking at making the stores roughly 30,000 square feet and basically the same size as a TJ Maxx, right? Which isn't super large. It's smaller than the average department store. And the way that they're going to have all of these different products in their stores is they're going to have this be a high-tech shopping experience. So they're going to use people's smartphones to leverage the space that they can actually have. They're basically just going to have a bunch of different clothing on racks as displays, right? And you can actually see an example of this here. And they'll just have, one size of each thing and one color configuration of each item. And you can look at them in the store, and then you can go on your smartphone and use the Amazon app. And you can actually look for different sizes and colors and have those sent to fitting rooms for you. So that's what's going to allow for more selection without requiring customers to sift through racks to find the right color and size and fit and all that. So it's a pretty interesting idea. We'll see if this ends up playing out well, if a bunch of people are interested in this. It seems like a pretty cool idea to be able to see all of these different styles and whatnot, just all in one place. You don't have to sift through the racks. I agree, that makes a lot of sense. And it definitely seems like the kind of thing that would save a bunch of space, and they'll just have the rest of the items in the back of the store sent to the fitting rooms for you. So hopefully that won't be a very slow process. Hopefully it doesn't get held up by, a limited number of employees or whatnot, sending those items to the fitting rooms. It could be very beneficial for Amazon, right? If they could get into the clothing game, right? They obviously sell a lot of clothes on Amazon already, but I have to admit, guys, whenever I've been buying clothes on Amazon, I've not been the biggest fan of the whole online shopping experience. I'd much prefer to go to a store to be able to see and try on what I'm actually going to buy, because you got to admit, a lot of the time when you buy something online, it's very different when you actually get it in person. You can't feel the fabric, and you don't know what it's going to be like. You don't know exactly how the fit's going to look on you. They make it look really great in the pictures. Sometimes it's not. So I much prefer not having to deal with returning half the items, even though they've got a pretty good system for that, right? They let you return most of the clothing items for free and fairly easily. But I would much prefer to just go into an Amazon store, be able to try the stuff on there, and then wear it, right? And then not have to worry about if it's going to fit right when I get the thing delivered to me. So overall, it seems like a pretty interesting business that they're going to be opening up. I'm looking forward to when it comes to my area. Obviously, they're just starting this in Los Angeles, California. So we'll see what happens over the next couple of years, if they get it into a lot more areas, if it's a success or whatnot. But we did want to cover, some of these stocks, and we will get to those eventually, right? We're going to start off talking about some of these other stories, some of the scarier stuff, unfortunately. Obviously, we have relatively high case counts, but there is another threat looming on the horizon. Antibiotic-resistant infections are a major global health threat that's killing millions, scientists say. So this could be, an omen of what's to come, right? Essentially, we're looking at a lot of drug-resistant bacterial infections that were associated with almost 5 million deaths in 2019, and antibiotic-resistant bacterial infections were the direct cause of 1.27 million deaths in the same year, scientists found. So they actually, made a comparison to HIV and malaria, and they said that the 1.3 million people who were, who died because of these antibiotic-resistant bacteria was more than HIV and malaria, right? So scary stuff, right? It's obviously a big threat. And over the past year, my guess is that we've been using a whole lot more antibiotics and, Purell and whatnot, hand sanitizer over the past year that has antibiotics in it. Antibiotic soap, right? We've probably been using a lot more of that over the past year just because of the current situation that we're dealing with, the pandemic. And potentially that is going to aid the increase of these drug-resistant bacteria, right? So we might see this being an even bigger problem in 2020, 2022, or 2021 as we get that data coming out, right? The latest data we've got is 2019. So over the next, couple of months, we might see some more data coming out for the following 2 years. Hopefully this doesn't become a big deal. 1.3 million people is quite a bit, but across, the 7 billion, it's not the largest amount. Once again, though, more significant than HIV or malaria. So a scary potential situation that we could be looking at. Hopefully it doesn't become a big deal. I think as long as it stays out of the mainstream press, I don't think it should have the biggest effect on the economy, but something to keep in mind, right? Now that we're in this mindset of worrying about diseases and the effect they could have on the economy, sometimes it becomes a self-fulfilling prophecy. So that's something to watch out for. Zach Taylor says, more things to be afraid of. Oh no, fear, fear, fear. Exactly. That's exactly what I feel a lot of these stories are discussing, though something a little bit more hopeful, right? If you're living in the US, if you're living in China, you might not be a fan of this one, but if you're living in the US, this is potentially good for you, right? So China is still, quote, 3 or 4 generations away from developing the latest semiconductor tech, IDC says. So semiconductors are used in a ton of stuff, right? Cars, home appliances, all that, computers, smartphones. And for several years, China's been trying to improve their semiconductor capabilities. A lot of semiconductors actually come out of Taiwan, and some even come from the United States. Some come from Japan and whatnot. Korea also. And China has been trying to improve their capabilities, but they're still a ways away. And this kind of speaks to how China operates, right? They do tend to be very good at producing things. But when it comes to tech, they've got good tech for some things, but it does tend to fall a little bit behind the United States. Now, obviously, the United States has been pretty well developed for a lot longer than China, so obviously we're going to have some advantage on these technologies. But for the past while, China's been fairly well developed. And, part of the reason that I think China is a little bit further behind is because, potentially there are less freedoms in China. There are potentially less incentives, right? There's not as much of a free market. There's still some of a free market in China, but it's overall much more stifled than what we've got in the United States. And I think it really does benefit the tech markets and just the markets that involve a lot of creativity and ingenuity to have more freedoms and to have more incentives to actually come up with these really great products, these semiconductors, and new innovations, basically. I think that those are really benefited by the freedoms, in China tends to be a little bit further behind on a lot of those issues. So we'll see what happens, if they end up catching up with these semiconductors. My guess is they probably won't be able to, right? If you look at one of America's richest people, really the richest person in the world, Elon Musk. We're gonna pull up his Twitter real quick. He's one of the most innovative guys out there, and he's constantly preaching about the free market and how important it is. So that's one of the things that I'd like to point out about the United States versus China, right? Our richest guy, Elon Musk, or one of our richest guys, is a huge innovator, right? And if you look at one of China's richest guys, Jack Ma, his company, Alibaba, it's an interesting company, right? But it's basically just a knockoff of Amazon. I'm not trying to bash Alibaba, right? It's an interesting company, probably has a lot of potential, but it is kind of just a knockoff of Amazon. And unfortunately, I've bought some stuff off of Alibaba, and it's a little cheaply made. It's not the most high quality stuff. It's a little bit of a knockoff. So, it just kind of shows the comparison between, what our richest people are doing. Elon Musk, he's working on EVs, battery technology, he has SpaceX going, trying to get people to Mars. And then one of China's richest people, Alibaba, which specializes in making, cheap products that don't cost that much to produce, that they can mass produce pretty easily. And it's an interesting comparison. So That's just something I wanted to point out. Now, something else I wanted to mention regarding Elon Musk was a kind of scary story at first, but potentially a good story that he tweeted out the other day. Jaw-dropping world fertility rate crash expected. So potentially, this could have an impact on the markets, right? If we see far fewer people in a bunch of different countries, we'll pull it up real quick. And we've got the market opening in about 4 minutes. So in about 4 minutes, we'll have the market opening. I'll just zoom in on the charts real quick just so that we've got them when the market's actually open. But we do have this interesting story about world fertility rates. We don't want Amazon. We'll pull up Bbig. So world fertility rates are set to be on the drop, right? And it's not for the usual reasons, right? People are, typically when you're talking about falling fertility rates, you're talking about, because of the pollution, there's lowering sperm counts and whatnot. It's not because of that. It looks like one of the reasons why is actually women are becoming more educated. They're using more contraception. They're deciding to have fewer children. And if we fall below 2.1 children per couple, then the population starts to fall. And you can actually see fertility rates over the long term have been falling ever since the 1950s. And these are global fertility rates. They've been falling quite a bit as of lately, right? And we're expected to see them fall quite a bit more starting right around now, right? Right around the 2020s is when we're expecting to see a pretty sharp drop in fertility rates. And we're actually expecting to go below the maintenance levels for just maintaining the same population. Close to 2040, it looks like we're expected to drop below that. So potentially we'll be seeing lower populations, and that could actually be a good thing, right? That could actually be a very good thing, because at a certain point, you might want to start seeing falling populations, right? We've got all of these assets in the country. We've got all these homes. We've got all kinds of products that people can buy. We have factories that are producing products somewhat in an automated fashion. And, a lot of those don't require a ton of workers anymore. So it could actually be good to see falling, rates of people. Not because, we don't want more deaths, but to see fewer new people coming into the mix. It could actually be good. It could mean that there are more resources to distribute amongst the existing people. So it could be a decent thing over the long term for the general, economic outlook of people's individual lives, right? The overall economy, maybe it won't benefit as much. From new innovations, there will be fewer people like Elon Musk born, admittedly, but hopefully it will have a beneficial impact on the individual wealth of each person, right? There will be more to go around with what we've already made and what we've already automated. So hopefully that will be the case, right? So it's a somewhat good thing. And also, a lot of people like to complain about the pollution and whatnot that each person causes. So that's another thing to think about. There will hopefully be less pollution as well. And hopefully it's a good thing overall for the markets. That's what we're hoping for. But we'll see. That's something we probably won't be dealing with for a long time, but I thought it was interesting because Elon Musk was covering it. So good morning, everybody. Welcome. Welcome, Rich. Welcome, Heckler Koch. Heckler Coke. That's right. Good morning, Mark. Good morning, Worlza. And FluxForce. Welcome, everybody. So FluxForce said, not sure about this, but me and 4 of my friends each had 1 or 2 kids during COVID. So yeah, definitely maybe during the pandemic, during lockdown, maybe some more kids were being born. But we'll see what happens with it, right? Hopefully it's, I think it's a decent trend, right? I think it's moving in the right direction, probably is what we would like to see, right? So overall, it looks like the markets are set for a relatively good open, right? The S&P is opening higher. DWAC getting back up to $80. Sundial, hopefully going to regain this 53-cent level right here. BBIG, unfortunately, it looks like it's been relatively stagnant in the after hours and pre-market, maybe moving down a touch, but overall not making new lows on the potential downtrend that it's on. Hopefully we'll see a rebound. So we'll see what happens with BBIG. It's down. It was down, it looks like 8% yesterday. DWAC opening in a very good way, back up above $80. Happy to see it. The S&P looks like still, relatively bullish. It looks like just over the course of the after hours and pre-market, we've been moving up ever so slightly. People might be getting some renewed faith in the economy now that, the NASDAQ officially entered correction territory, right? Down 10%. It was pointed out on CNBC, maybe that's what people were waiting for. Maybe they're looking for the stock market to start moving back up. It looks like the S&P got a little bounce off of near the $450 level. Maybe we'll see a continuation of this bounce, hopefully. But as of now, we are still technically in a little bit of a downtrend. But DWAC, up 4%. It looks like people really want it above $80. Obviously, this is just the first bar. We'll have to see what happens. Sundial, it looks like, is getting pushed down just a touch. And we'll pull up the most popular stocks on Wall Street Bets and Reddit. So GameStop number 1, the S&P number 2, as usual, right? It's usually up there. Then we got Tesla. Not sure why Tesla's up there. It's not doing anything too crazy, I don't think. It's up 1%, right? So it's basically just been, we'll pull it up over the S&P. It's basically just been sitting around this range for a while. Obviously it's a pretty large market cap. It's pretty volatile for how large of a market cap it is, but it hasn't been doing anything crazy, right? It's not been shooting up or down. It's kind of just been sitting around the $1,000 level, using that as support for the past couple of days and weeks. So we'll see what happens with Tesla, right? And Buck Sutherland asks, Rob, do you own any Lucid? I believe I've got some Lucid in my long-term, my M1 Finance account. Yeah, I think I've been in Lucid for quite a while now. So, yeah, I do like Lucid, right? I'm in a couple of EV companies, LCID, that's it. So I'm in Tesla, Lucid, Centro, right? Obviously, Centro's not been doing great lately, but there is a option that I want to point out with Centro, just to show you guys something that I've been doing lately that provides a pretty interesting opportunity, right? So we'll pull up the Centro options chain. CENN is the option chain for Centro. So here we go. We've got it, and I believe it was the July 15th of 2022 options, basically the furthest out you can go. If you look at the 250 puts, you can sell those. I think I sold them for 95 cents per contract, right? So basically, that means that my average price of buying CENN, if it ends in after July 15th, if it ends below $2.50, my average cost of buying CEN would be $1.55. So, if you think that CENN, Centro Automotive, is going to be below $1.55 by July 15th, then you probably don't want to take that trade. But it was an interesting one. I don't think we're going to be below $1.55. I mean, it's possible. Anything is possible in the stock market. Obviously, we've fallen quite a bit lately, but I think that there's a decent chance that we're going to be, above 250. I think there's a pretty darn good chance. Currently, we are, even though we have been dropping lately, right? We're just barely above 250 at the moment. We're at 254. Maybe we'll fall below it, but will we stay below it until after July 15th? I don't think so. I think that CENN is due for a little bit of a bounce. That's just my opinion, though. Obviously, not financial advice. I'm not recommending that anyone, buy it or sell it or do whatever. I'm just letting you guys know what I've been doing with it. But that's what I think about CENN. So other than that, we do have some comments. So, and FlexForce referring to that fertility rate story, saying COVID, I feel like, will show a baby boom. Very possible. It's very possible. We could see a little bit of a boom during the lockdowns. Although, a lot of people were very scared of the lockdowns. So a lot of people were potentially thinking, very pessimistic stuff like, ooh, do I want to bring kids into this world and whatnot? So maybe some people were having fewer kids during COVID. It's possible. But we'll see what happens with the whole fertility rates thing, right? Hopefully, I think a lot of people are hoping that we'll continue to see falling fertility rates, not because of, medical issues, right? That is another worry that a lot of people have, that because of pollution, we are seeing falling fertility rates and whatnot. But hopefully we'll just see it naturally occurring, right? Because people are choosing to have fewer children, not to such an extent that, the human population doesn't survive, right? I think if we started to see populations get too low, people would probably choose to have more kids. But in the meantime, we've gotten quite a few people on the planet, so hopefully we'll see it decline a little bit, right? I don't know if we need 7 billion, right? If we need to keep growing from that, maybe we've got a good amount right now, and that's good for what we're capable of sustaining, technologically speaking and environmentally. I think we're at a good place. So hopefully we'll stay there or potentially move a little bit lower. Now, there was something that I wanted to discuss that I've been thinking about the past couple of days that has to do, yes, with the markets, but also just with your own personal financial lives and not even just your financial lives, but your time economy, right? You don't want to be wasting too much time. And so I did want to bring up the issue of comparative advantage. And this is just something I've been thinking of the past couple of days. I've been thinking about, what it's worth spending your time on. And this is something that I've, used to make decisions in my own life for the past while now. But the idea behind comparative advantage is maybe someone, typically you hear about it with trade, right? So maybe one country is better at producing semiconductors than another country, and another country is better at producing shirts. And so, the country that's better at making shirts will trade the shirts for semiconductors, and it ends up being a benefit for everyone. Now, obviously, a lot of people have the idea, well, let's just produce everything in our country and do it all ourselves and save the money, right? Why send it away? Why send out money from the country? Let's just make it here. And a lot of people have that idea in their own lives as well, right? They're thinking about, if something in their house breaks, right? If their toilet breaks, then why would I hire a plumber to fix it? Why not just fix it myself? And sometimes that makes sense, right? If it's something easy, if it's just a little flap on the toilet and you can replace it in 5 minutes, then it makes sense. But if it's a big job and you don't have too much experience, being a plumber, then maybe you don't want to bother fixing it yourself, right? Maybe your time could be better spent doing something else that you're really good at, right? So the example of maybe, you have a job that pays you $50 an hour, right? That's obvious, we're just choosing a random number. Maybe your job pays you $50 an hour, just as a random example. And you could work for 2 hours and use that $100 to hire a plumber to fix your toilet instead of doing it yourself. Maybe it takes you 3 hours. Some people are looking at it like, well, I would rather just save the $100 and spend 3 hours fixing the toilet. But if you have that $50 an hour job, then it might be more worth it to you to just hire the guy and work 2 hours and get your toilet fixed. Even though technically you're spending more money, you actually have more time overall. And, time is money, right? You can spend that time doing other things to make an even larger profit, and you'll end up in a better situation. And not only will you end up in a better situation, the plumber will too, right? Because he'll then have that money. He'll have been able to use his skills and put them to good use instead of just sitting at home doing nothing. He'll be able to have used his skills to, help you out, and you'll have paid him. You'll have made more money going to work, doing whatever you're good at, producing whatever product you make or whatever service you provide. And, I think it's a trap that a lot of people fall into where they don't use that comparative advantage, where they don't think about what their time is worth, where they just think about, being very frugal. It's kind of the Dave Ramsey approach. And it doesn't always work out the best. Sometimes it works out, but it's not always the best. What Dave Ramsey is saying, where you got to save every penny and get out of all of your debts. That's not always the best route to go down, because sometimes it makes sense to have some debts, right? Depending on the situation, right? If you have the issue of comparative advantage, right? If you have a house, say, and you've got a mortgage taken out on it, potentially, you'd be better off having that mortgage taken out and paying 3% interest on it than and putting some money in the markets, maybe growing it at 8% on average. Obviously, none of this is financial advice. It's just an example, right? But if you could have that mortgage taken out with a 3% fixed interest rate, you might prefer to have the money in the markets, right? Because then you could maybe potentially be making 8%. Obviously, there's potentially you could lose some money in the markets. But it's an issue that I think a lot of people don't always consider, right? It seems very simple to say you want to get out of debt, you want to spend as little as possible, but that's not always the case, because your time does have value. You have to think about that. And that's something that, people don't always consider. And that's just something I wanted to touch on. So Silver says, when the market goes down, invest in your house with upgrades or repairs. Yeah, that's a potential way to go about it, right? And you don't necessarily want to be doing those upgrades or repairs yourself. Sometimes you want to hire someone out who's really good at it and can do it real quick, and hopefully for more effectively and efficiently from an economic standpoint, right? But sometimes it does make sense to do stuff yourself if it's easy and quick and you know how. So it really depends. It's a case by case situation. But we're going to get back into some of these stocks, right? The stocks are actually having relatively bullish days, right? So Sundial's up 3%, back up above 53 cents. Happy to see it. DWAC back up above $80. We're at 81.23. Also very good stuff. Let's pull up StockTwits and see what we've got ranking wise. What is active on StockTwits? So look at that. It looks like BBIG is still number one, above the SPY and AMC, and above SoFi. So SoFi is still pretty high on the leaderboards on StockTwits because they just got their banking charter. They got authorization to become a official bank in the United States. So SoFi's been benefiting from that. They're up 6% today. And BBIG is still number 1 on the StockTwits leaderboards. There's a ton of people are still talking about BBIG. DWAC is number 5, so a bunch of people talking about that one also. So that's interesting. A lot of people talking about them on, well, let's see. BBIG is number 5 on Reddit and Wall Street Bets. So it looks like it's continuing to do well. It was number 7, I believe, yesterday, if I'm not mistaken. And DWAC, unfortunately, looks like has fallen a bit of a ways on Reddit, right? It's down to number 15, so not the best on Reddit. It's never been a huge Reddit favorite, though. It's typically received more love from Google and StockTwits and all that. So we'll see what happens with BBIG. We'll pull it back up over SEN. It looks like BBIG is down about 10% today, down to $4. Unfortunately, we have fallen quite a bit with BBIG hitting. Potentially. I mean, we'll potentially be hitting a new low in this downtrend, right? If you get to $4, we'll potentially be hitting a new low. So we'll see what happens with it. It's not looking like the best situation. It looks like we did potentially hit a bit of a peak, right? We might have to wait for another catalyst before we see another run up. Maybe the Tide dividend. If they announce that could cause another little run up. It looks like we did not get high enough. We'll pull up the short interest, but we did not get high enough. It looks like to cause a short squeeze, and unfortunately, if you look at the options chain for BBIG, we've lost a lot of the options that were in the money. If you look at January 21st, we've lost a ton of these in the money call options, which is exactly what we didn't want to happen, right? We wanted these to be in the money so that shorts, or not shorts, but so that, well, I guess shorts of these call options would have to start covering their positions by buying up shares. And it looks like they have avoided that for the meantime. If we pull up BBIG on Ortex, we'll see what's going on with the shorts. Oh, look at that. So it looks like the shorts are continuing to double down on BBIG, up 3% short interest-wise today, up to 28.33%, 34.81, almost 35 million shares, record high short interest levels. We've never seen them this high, even in the past, during the past, when we were seeing, unfortunately, a big decline in BBIG stock as shorts just kept piling in. It looks like we're seeing something similar, right? As soon as BBIG starts moving up, the shorts just continue piling into the stock, selling additional shares, and potentially BBIG's suffering from the situation where it might not be popular enough, right? Although it is a leader on StockTwits and whatnot, it looks like it's not quite popular enough. It hasn't quite gotten to, well, it hasn't gotten anywhere near AMC level, right? What AMC saw way back, or GameStop, or even what Sundial saw way back, it hasn't quite gotten there yet. So unfortunately, it looks like we are losing a bit of momentum. Now, when we see this, a lot of people do tend to get fairly fearful, right? People start to exit their positions. Traders start to exit their positions. There's relatively few buyers in a down market like this when you see a stock just falling off of potentially, very high highs, right? Compared to what we saw just a couple of days ago. We were down at $2, then we hit up $6, and we're still double where we were maybe 10 days ago. So people are probably still fairly fearful of how far this could fall. So there probably is a ways. Now, obviously, there could always be a rebound situation, right? Because the markets are never easy. And if it was just a guarantee that this thing was going to plummet down back to $2, then it would make sense to just, pile in a short position on it, right? Which is what some people are doing. If you look at the Ortex data, obviously some people are increasing their short interest on it, right? So some people are increasing the number of shares short on BBIG, but it's not a guarantee that they're just going to make money easy, willy-nilly. We could always bounce back in a decent way, right? It's never easy money for anyone, not the shorts, not the longs. There are no guarantees, but we'll see what happens with it over the next couple of hours, right? If it keeps falling down like this, then it's not looking like a pretty situation, right? The harder and faster we fall, the tougher it's going to be to regain these highs, right? Which is what people were really hoping for, right? We've lost quite a few open interest call options. We've lost 93,000 at the $5 strike price, 42,000 at the 450, and 31,000 at the 4. Now we only have a measly 13,000 at 350. So it's not looking like a great situation from a gamma squeeze perspective, and definitely not from a short squeeze perspective, right? We'd have to get quite a bit higher to start seeing potential for a short squeeze. So we'll see what happens with it. Obviously, it's not an ideal situation, but this is what we discussed, the possibility of, right? There's always the chance that you're going to get something like this, and we did say that there would certainly be a peak at some point. So looks like $6 acted as the resistance this time. Looks like that's the highest shorts we're willing to deal with. Now, DWAC, doing pretty good. Sundial looks like it wants to test the 53-cent support once again. If we pull out the 90-day chart, we can see we've tested it a couple of times in the past. Now, we did unfortunately bounce below it this time. Hopefully, we won't maintain level below that for too long, right? We did just recently, just today, get back above it. Hopefully, we won't move back below, right? That would be rather bearish for Sundial. But I think that, I mean, this one is just so cheap. It's just gotten pushed down time after time. You know, we'll pull up the short interest on Sundial. I bet it's probably been increasing, if I had to guess. Here, we've got Sundial. Their short interest is currently sitting. Let's see, we've got it slightly increased today. 0.57% increase on Sundial short interest, 13.37% of the free float, 275 million shares just about, ever so slightly increasing over the past week or so, right? We got to a fairly low short interest compared to what we've seen historically, still pretty darn high. But overall, we've been increasing a little bit on Sundial. So we'll see what happens. Hopefully we'll hold 53. If not, then, you know, it's not the end of the world. We'll see what happens with it. But DWAC, it looks like, might want to test $80 again. It's starting to move back down. And the SPY is just continuing to move up. It looks like a lot of the fear in the overall markets has disbanded. So overall, a good situation for a lot of the stocks in the market. We'll pull up the market map if it's loaded in yet. Hopefully it has on FinViz. That is, okay, yeah, so look at this. Look at this. We're looking at a very green market. Overall, pretty much everything is up, right? There's a couple of things, there's a couple of specks of red in this market, but Apple, Microsoft, Nvidia, Adobe, Google, Facebook, Amazon, Tesla, they're all green. The big dogs are green. That's going to take the market up almost no matter what, right? You could see, they take up a very large portion of this market map. If you look at the tech stocks, they take up quite a bit of this market map. And, it doesn't take much of an increase in them to outweigh a lot of the potential decreases that you could see in the rest of the market. And overall, it looks like most things are pretty green, right? Energy is the one sector. Energy and tobacco, it looks like, are the two sectors that are a little red at the moment, right? The oil stocks aren't doing great. Potentially, people are expecting the oil inventories that are coming out at 11 today to be a little bit, maybe they'll expect the inventories to have increased, right? Maybe there's less demand. They'll expect higher inventories. We have been getting relatively low inventory numbers, right? Big decreases in the inventories lately of typically fairly high above what we're forecast to get. So we're forecast to actually have a relatively low decrease this time, right? Less than 1 million barrels decrease. We'll see what happens with it, though. I have noticed, I will say, that gas prices around where I live at least have been a little bit better than what they've been over the past couple of months. Gas prices have definitely been improving, so potentially that's an indication that we could be seeing some lower oil prices, almost certainly, actually, in the near future. Hopefully it'll continue on that downtrend, right? I'm hoping that we won't see too much more demand for oil and a lot more supply, right? I'd like gas prices to go down significantly, right? That's only contributing to inflation, as oil prices especially, right? Because oil and gas are what we use to transport pretty much all of the goods that we buy, right? They're either on trucks or boats or whatnot, planes, and you need gas for that. And oil is, and in some you need electricity, and oil can be used to generate electricity and whatnot. So oil prices rising do tend to have a fairly negative impact on inflation, right? If you see the cost of transporting things moving up, then you're going to see the cost of pretty much everything. It has to follow in suit. If it becomes very expensive to transport, then you're looking at a relatively negative situation for inflation. So hopefully we will see the price of oil continue to move down. It will be a little bit better for the inflation markets. Now, speaking of the inflation markets, we'll pull up gold, which actually just made new highs on this uptrend today in the pre-market. And yesterday we had a beautiful day for gold. I know Zach Taylor will be happy to hear it. A lot of the people who've been hedging against inflation will be happy to hear it. It looks like gold is on potentially a little bit of a run-up. If you look at the yearly chart, we're starting to move back up in a fairly significant way. Yesterday was incredible for gold. A lot of the mining stocks, like Barrick Gold, were up quite a bit. Look at this. Barrick Gold was up about 8% yesterday. Massive green bar. We're seeing some green today. Kinross Gold, KGC, was also up. It looks like it's still up today, even though we've seen some red. We're up 0.42%. So we'll see what goes on with KGC. And, I did actually want to place a little trade on KGC. I wanted to buy up a little bit more KGC. So let me just do that real quick. I put in an order yesterday. It didn't get filled, but I will be placing another order right here. So look at that. We'll just buy we're actually just buying a couple of options on it, right? So we'll see what happens with price, and hopefully it'll fill. Hopefully it'll fill. We'll see what happens. I just placed another little order. Hopefully it doesn't take off without me, right? But now we're finally starting to see a little bit of an appreciation in these gold and silver metals prices, right? So hopefully that will continue. Either way, either inflation's going down and we're probably going to see stronger markets, is my thinking, or inflation will continue to rise, and that should, if history is going to be a representation of what we'll see in the future, then gold prices should be going up. So we'll see what happens with it. Hopefully we'll see rising gold and silver prices, but if not, I'd be happy if a lot of these growth stocks came on the up and up, right? I'd be happy to see these growth stocks turning green. If the markets overall start turning a little bit more green, a little bit more favorable, if we see potentially not as many rate increases as we were expecting this year. Now I think we're expecting 4. We're expecting, I think Powell said, as many as is necessary, something along those lines. So that would be fairly bad, right, if we saw drastic rate increases, right? I'm hoping that we'll stay relatively low, right? The easy money policy might not be good for inflation, but it's certainly good for stock prices, which is what I'm banking on, right? I'm banking on the Fed probably not reducing or raising rates as much as they've said they're going to, right? I think some of it is talk. I think there's a lot of debt out there. If we pull up the national debt, then we can actually see what we're looking at. We're getting scarily close to 30 trillion in national debt. We are currently at 29 trillion, 818 billion, 760 million dollars worth of debt. Breaks down to about $89,677 per citizen of the United States. So, and what's very scary is that those citizens include, children. So if you break it down per taxpayer, it's about $238,000 per person. So really scary stuff. I don't think raising interest rates is going to be good for the overall economy with all of the debt out there. I think that it could be a real damper on it, but we'll see what happens. Hopefully it won't be a catastrophic situation, although it certainly could be bad. There's certainly a lot of debt out there, and people are starting to take on new forms of debt as well, right? They're starting to enter that buy now, pay later market that doesn't necessarily, I don't know if that counts as debt in the traditional sense, right? It's basically just recurring payments that you make over a period of weeks. So I don't know if that necessarily counts as debt or if it's just, a new purchase every couple of weeks. So we'll see. It probably doesn't contribute to the national debt is my guess, but that's certainly a new form of debt that people are taking on. In fact, let's see. Let's see if we can find a story on that. So look at this. Look at this. This came out back during early December. Buy now, pay later boom shows no signs of slowing this holiday season. So 7% of shoppers said they will be using buy now, pay later as a payment method for holiday purchases this year. And we actually saw far more people than that, I believe, using it. So let's see. I think we saw quite a few people using it. Let's find a different story on this. So let me pull this up. We saw relatively high rates of people using. I think it was closer to maybe a 40% increase in use rates. So we'll see what happens with. And okay, we've got a question in the comments. So Steve Pont asks, what happens if Sundial gets delisted? Do we lose our shares, or it's that we won't be able to buy anymore on Robinhood? So I believe it's that you won't be able to buy anymore on Robinhood, but you'll still be able to have access and sell your shares. So, well, you can pull this up. Here we go. So this is from Robinhood. And they say, what happens if I own a stock that gets delisted? If a stock that you own delists, you'll be able to sell it in the market, but you won't be able to purchase additional shares. So there you go. There you go. They will not just take away your shares. At least Robinhood won't. So it depends on what brokerage you've got. Maybe some will auto sell your shares. Who knows? But Robinhood will not be force selling your shares. At least that's what they say. Now, an interesting note to add to that is once a stock delists, the in-app market data will no longer reflect the current trading price. You'll need to find stock quotes elsewhere for an idea of what price your sell order will execute at if you choose to close the position. So that shouldn't be too difficult, right? You can always pull up TD Ameritrade's Thinkorswim and pull up whatever over-the-counter stock you want, and it still has a good indication of what we're looking at. So hopefully, we won't get delisted, right? I don't think we'll get delisted. I think it would be, very strange for the CEO to allow Sundial to get delisted. It would not make much sense, especially right after the Alcana merger. They're almost certainly going to get an extension. And even if they don't, they could do a reverse split. I don't think they should. I think they should probably go for that extension. But, it's up to the CEO and the management. So we'll see what's happening. And good morning, Brazil AA. Good morning, man. Welcome. And Paul Rush says, why on earth is anyone using Robinhood? I understand the sentiment behind that, right? A lot of people feel kind of cheated and scammed almost by Robinhood during the big AMC rush. A lot of people were not happy to see that Robinhood was stopping buy orders on GameStop and all that. So unfortunately, Robinhood did decide to limit the orders during the GameStop rally. We'll pull up GameStop, GME, and AMC. They decided to limit you to one share per customer, right, that you could buy. And that was near the peak of this, I believe, if I'm not mistaken. It was a while ago at this point, but it was near the peak of the GameStop rally, and that really put a big damper on the orders that could be placed. And a lot of people were probably going to be placing more orders, right? Certainly more than they would have been placing if they could place more than one. Now, since then, we've seen a big decrease in a lot of these stocks, unfortunately. And, people blame Robinhood in that, in part, right? Obviously, there's a lot of other people who are blamed, but we'll see what happens with Robinhood stock. Obviously, people have taken out some of their frustrations on Hood stock. Some retail might even be shorting this one. People might not be too keen on holding it. It has gotten pushed down. It looks like to all-time lows just yesterday. It's seen a little bit of green today. It's up 4%. But, it's still a very popular platform, right? A bunch of people still have bought into Robinhood for the first time. They use it as their initial trading platform. I think that it's overall a fairly easy-to-use platform. Although they did make some mistakes in the past, they probably should not, almost certainly should not have, stopped the buying of shares of GameStop and AMC, and Sundial was even affected to some extent, right? When it was pumping up, they almost certainly should not have done that, but they did, and they're certainly paying a price for it now, stock price wise. Now, I still think Robinhood is a company that can do fairly well in the future. I've sold some put contracts on them, so I don't think they'll be falling that much more. They've got a ton of cash on the balance sheet. I think they've got about $8 billion in cash, and we can pull up their market cap. It's almost ridiculous, the valuation they're trading at with how much cash they've got on the balance sheet. They've got about $8 billion in cash, and their market cap right now is about $12 billion. So there's only $4 billion that's not literal just cash that they're holding. So when you buy into Robinhood, you're buying cash. And think about this: if you were a big bank or someone who wanted to buy out Robinhood, you could do it. It wouldn't actually cost you $12 billion to buy out the entire company. It would cost you $4 billion because they've got $8 billion in cash. So we might see a Robinhood buyout sometime. I mean, it's possible. When these stocks get pushed down this much, I mean, Robinhood has just been getting decimated. It's possible that we'll see a buyout. A lot of consolidation might happen with these smaller market cap stocks over the next couple of weeks and years. Or months, probably not years, right? I don't think these stocks will stay at valuations this low for years. But we might start to see some buyouts occurring. I mean, we did see it with Activision and Microsoft. Microsoft bought out Activision, ATVI, and it certainly pumped up quite a bit on that news. If you look past 30 days, you can see a big pump when Microsoft announced that they were buying Activision. And if you look at the past year, it's just been falling so much, right? They announced they were buying it because it had just gotten so darn cheap. Even though, they make a lot of AAA games, a lot of good games. We'll see what happens with the additional potential for buyouts, right? If more people decide, if more people in the upper echelons of these companies decide to do some buyouts, then we could see big increases like this happening rather dramatically, really, messing with the short sellers on these companies. Let's pull up the shorts on ATVI real quick. But it could have a very beneficial impact for a lot of these small market cap stocks that end up getting bought out. We could see dramatic increases. So look at this. Look at this. On ATVI, when it got the announcement a couple days ago that Microsoft was purchasing it, we're seeing huge decreases in short interest. So we're down 15% short interest change today. A lot of shorts are getting out of this one. It looks like we'll probably continue to see a big decrease. They were at 13 million shares short, and it's fallen by about 50% since. Now we're at 7.5 million shares short. So a lot of shorts had to just exit that one, probably for a loss, right? Because ATVI had been trading below where it's at for the past couple of months. Since it looks like early November, they were trading fairly low. Even in October, they were trading below where they're at now. So a lot of shorts are probably in the red on this one, and it wouldn't surprise me to see some more buyouts. Now, specifically, Hood could be a very good buyout for a large market cap company, something like JP Morgan or another bank like that wants to take over the Robinhood trading platform, because you pull up the market cap. Once again, $12 billion market cap on Hood stock, $8 billion in cash. So it would only really cost them $4 billion, right? They'd be buying. Sure, they'd pay the 12, but then they'd get 8 in cash when they actually acquired it. So it's a potential situation to think about. We might see some buyouts now that these companies are just getting to these ridiculously cheap valuations. Now, CJW says, look at MNMD. Yeah, I like Mind Medicine. I'm a stockholder in that one. I've sold some options on it as well. It looks like we're getting a little bounce off of $1. So I'm happy to see it. It looks like the all-time lows of this one are at $1 at least. Let's see. Not the all-time lows, but at least for the past year, I believe. Yeah. So for the past year, the all-time low for MindMed is $1, and it looks like we were just hitting that earlier today, even in the very early morning trading. So hopefully we'll see some price appreciation on MindMed, right? It's not Jim Cramer, it's Kevin O'Leary, right? Mr. Wonderful, the guy from Shark Tank. He is an investor in MindMed, right? So MindMed is a psychedelic therapy company. So we'll see what happens with MindMed. I certainly like it. We'll see what happens, though. It's been getting battered like all of the growth stocks have over the past couple of months. It's just been getting pushed down lower and lower and lower. So that's too bad. But, it's what's been going on in the markets, right? All of these small market cap stocks have been getting hurt. Hopefully they'll start to rebound. We'll pull up the Russells real quick just to see what's been going on with it. But, I mean, the Russells, look at this. The Russells has been getting slammed the first couple weeks of the new year, right, of 2022. The Russells has been getting slammed down, dunked on, making new lows for the past 365 days. Just yesterday, the Russells. So a lot of the small market cap stocks getting destroyed. We'll see if that continues. I mean, hopefully not. Hopefully we'll see these rebound in a big way. I think they're just getting to these valuations that are way too cheap, right? Way too juicy of a buy. But we'll see what happens. We'll see what happens with it. And good morning, the abstract. I don't know if I caught that earlier, but good morning, man. So let's see. Mazoom Ali says, "Hi Rob, good work, bro. Can you please shed some light on Exela Technologies? Thanks." Sure. So XCLA, I think that's the ticker symbol. Exela Technologies. So I'm not too well versed with this one. I've not looked at it too lately. I think I looked at it a long time ago, but let's see what they've got on Yahoo Finance. XCLA. Let's see if we can find a company profile and figure out what they're all about. So, Exela Technologies provides transaction processing solutions, enterprise information management, document management, and digital business process services worldwide. The company operates through 3 segments: IT, processing solutions, healthcare solutions, and legal and loss prevention services. Okay, so it's a bit of a tech company. It sounds like, yeah, software, application, technology. All right, and once again, it had an incredible start to 2021. A lot of these smaller market cap stocks did, a lot of these growth companies, and it looks like it's been continuing the trend of just getting crushed. So I don't think it's going to last forever. I think that a lot of these companies are probably going to bounce back at some point, and probably bounce back in a big way as soon as there's a little bit less fear in the market, right? I mean, this thing, it looks like it's been getting slammed on, dunked on ever since July, when it had its last run up to $5. So about 10x from where it is now at 46 cents. And we'll see what happens with these, right? There's no guarantee that all of these are going to come back. Obviously, this is causing a tough situation for them. The economy, with the rising case counts and all that, might not be the most prime place for them to be growing rapidly. So it's understandable some of these small market cap companies might go out. I don't know the specifics of Exela Technologies, right? I don't know what they're all about, their balance sheet and whatnot, but if there is a risk of them going under, then maybe they're not the best one. But I don't think that all of the small market cap stocks deserve to be pushed down this much, right? I think it's just an overall trend, a lot of fear in the markets. A lot of people, a lot of hedge funds and institutions, looks like, are just flowing in to these large market cap stocks. I mean, day after day, you can see there's some of the greenest in the market, right? Apple, Microsoft, Google, Facebook, Amazon, Tesla, Nvidia. They just keep ballooning these market caps, just flowing in. Everyone thinks they're the safest companies because they're the largest. And to be fair, they are fairly safe bets, right? It's a decent place to park some money. So we'll see what happens. But the small market caps, I think they're coming back. I think they're coming back sometime in 2022. Hopefully they will, right? Obviously, if bad things happen to the economy, if we get a ton of inflation and we have rising interest rates, that could be bad for them. But sometimes, sometimes you end up seeing the markets do stuff that doesn't make sense. And if we do see rising interest rates, then maybe people will be, maybe the masses will be expecting these companies to fall, but they've already fallen so much. We might just see people buying them up, assuming that now's when they're cheap. People might start flowing into these companies as they decrease in value more and more. So we'll see what happens with XELA and a bunch of the small market cap stocks, right? Sundial as well. It looks like we did get a nice bounce. It's interesting. The Sundial and DWAC charts look relatively similar today, right? We had these run-ups through these resistance and support levels, and then we had a little bounce around 950 at the same time, and now we're back on the up and up. So DWAC and Sundial both doing great today. Sundial's up 3%, DWAC up 4.85% or 4.58%. So we're looking pretty good. And we will pull up CFVI stock real quick, which is one of my the new stock that I'm eyeing right now, right? I'm looking for a good entrance on CFVI. It's Rumble stock. I think they've got a lot going for them. In the future, they're obviously growing rapidly. They just acquired a new payment processing company, so they're really integrating a lot of aspects of success into their company, right? They're vertically integrating, so they don't have to rely too much on other companies, which is smart, right? Because they're a free speech platform, and you never know where the limitations are going to come from, right? It could have come from the payment processing companies saying, you can't allow that kind of stuff on your platform, trying to push them in a certain direction. And now that they've got control of that, they're in a much better position to be able to maintain the rights of creators and whatnot, to be able to say what they wish. So I think that's a really good thing. I think that a lot of people are willing to use and invest in companies that stand for something good, companies that have a good cause that they're fighting for. So I think that CFVI, especially once it gets the new ticker, once the merger goes through with Rumble and they get a new ticker and they're a little bit more recognizable as Rumble stock, I think we'll start to see probably some good price appreciation. But we'll see if we can get them on a little bit of a dip, right? I'd ideally like to be buying them a little bit closer to $10. We'll see. I probably should have been buying back there, but it wasn't as on my radar as it is now, right? Now they've been out for a bit. I've been watching them for a while, and I think I may have held them at one point. I'm pretty darn sure I held them at one point and then sold them when they moved up, maybe around $13 or $14. But I don't really remember. I probably should have just held on to them, right? Even though I might be down a little bit. But we'll see what happens with CFVI. It is one that I do have on watch. That's one of my my up and coming favorites, right? It's a good one. So we'll see what happens with it. Obviously, I have a Rumble channel. If anyone's interested in that, I'll pull it up real quick, just for those of you who might not know about it. But here we are. I'll pull up the Rumble. We've got it right here. We're on Rumble as well. So we're at 588 subscribers. We're trying to get to 600. So we only need 12 more people to hit that subscribe button. So feel free if anyone wants to do it. We have far more subscribers on YouTube, but we've also got a decent amount on Rumble, and we're certainly trying to grow that one, because that one I trust a little bit more. I'm a little bit less worried about them, canceling or shadow banning me for saying whatever it is, right? I don't think I say anything too crazy that YouTube would want to do that to me, but I certainly watch what I say, right? So we'll pull up an interesting mover today. AMC, it looks like, trying to climb back up to $20. Look at this on fairly big volume as of late too. On the road to $20, it looks like. AMC just bounced off of it very, very minorly. We'll see if we can get back above it. We're up 8% today on AMC. I know a bunch of people are big fans of AMC. And Silver says CFVIW and CFVI. Eyes on the chart. So we've got CFVI, and then we'll pull up CFVIW. And, I'll tell you what I think about CFVIW, but we've got, AMC, we'll move AMC right here real quick. Right, we'll move AMC right there, and we'll pull up CFVI and CFVIW, and I'll tell you what I think about it. So, here we go, CFVIW. So I'll tell you what I think about the CFVI warrants. So, here we go. Let me pull up the warrants. So here we go. Okay. Here we are. So the warrants. The warrants are CFVIW. And at the moment, I'm a much bigger fan of the stock than I am of the warrants. Reason is, the warrants are trading for around $3 per share. And what the warrants let you do is buy the stock for $11.50 per share, right? So we'll read it out. Each whole warrant entitles the holder thereof to purchase one share of our Class A common stock at a price of $11.50 per share. So currently, if you're buying the warrants, you're paying $3.85 for the right to buy CFVI at $11.50. So currently it's trading at $12.50. That means that the warrants have an intrinsic value of about $1 right now, because you could pay $1, and if it was priced at $1, then that would make sense, right? Because you could pay, you could buy the warrants for $1, and then you could buy the stock for $11.50, and it would add up to $12.50, which is what the price is if you add the price of the warrant onto your right to buy it. So now that it's trading, at $3.85 though, if you buy the warrant and then you decide to exercise it, you want to exercise it and get the stock, you're paying $3.90, almost $4 to buy it at $11.50. So it ends up being $15.50 that you're paying to buy CFVI. You could just buy it for cheaper than that. Now, obviously, there is some potential benefit. If the price of CFVI moves up dramatically, then the warrants would move up in a larger percentage increase, right? Because, say CFVI moved up to $20, well, then each warrant would have an intrinsic value of around $8.50, so it would about double in price, or more, right? Because there'd still be some extrinsic value, but it would have an intrinsic value of at least, double the current price. So you'd be doubling your money percentage-wise. So there is some reason to potentially buy into the warrants, but I think you're right, there is more risk also. So if CFVI just stays at $12.50 indefinitely, then the warrants will decrease to a value of around $1 eventually, right? So I'm a much bigger fan of just buying the CFVI stock at these prices. Now, an instance where the warrants do make some sense is with DWAC, right? Because the warrants for DWAC also entitle you to buy DWAC at $11.50. So looking at DWACW, the warrants, you're paying $29 to buy DWAC for $11.50. So add $11.50 to this $29 price. Let's just call it $30. You're then paying $41.50 about to buy DWAC And currently it's trading closer to $80. So there is a lot of intrinsic value that's not marked in these warrants that is in DWAC stock. So the warrants make a little bit more sense, in my opinion, at least to get DWAC W than to get CFEIW. But that's just my opinion. Obviously, not financial advice. Not recommending anyone do anything with warrants or stock or whatever. It's just something I've been looking at recently. So we'll pull back up SPY. It looks like the S&P is continuing to climb up and up. It's doing pretty good. And what else did we want to pull up? We wanted BBIG right here just to see what's going on with it. It looks like we made lows of 384. So we are continuing, unfortunately, this downtrend, it looks like. So James Wood, Rob, if you look up the warrants on CFEIW, you can convert with no cash. So let's see. Convert with no cash. Interesting. Not quite sure what that means, man. If maybe, I don't know what you're saying about convert with no cash. I'll look into that. I'll look into it. Potentially there's something I'm not quite gleaning about the warrants, but I do certainly like the look of the DWAC warrants. Although, I like the options play that I'm a part of even more than that, right? I think there's even less risk in the options play that I'm a part of. For those of you who are unaware, though, I will point out the options play that I'm partaking in with DWAC. So if you pull up the DWAC options chain, you look at the January 20th, 2023 options, what I've done is I've sold some of these $50 puts, right? So I've taken a short position on the puts. So it's actually a bullish position on DWAC. Essentially, I'm betting that that DWAC is going to be above $50 on January 20th of 2023, and that these options will expire worthless, right? So then I'll just collect the premium that was originally, I think, closer to $34. Now it's decreased a significant amount. I've made some money on this trade already as DWAC has moved up. So it's a relatively low risk position that I've taken on DWAC. And I will point out, guys, we've got about 70 viewers of the stream right now. We've got about 44 likes. We could probably pump up the like button just a touch. We could pump it up. We could probably get maybe up to 50 likes. If 6 more people want to be the ones to like the stream, we could probably do it both, on YouTube and on Rumble. We've got some people who could potentially hit that Rumble button, help get this out to more people. I think the algorithms would appreciate that a decent amount. So we're only about 5 likes away. I think we can do it. Maybe we can. I tend not to beg for likes. I try not to, but every now and then you've got to do it. So thank you guys very much. We're already at 48, so only two more people who wants to be the 2 to help out. It looks like AMC is seeing a little bit of a bounce, unfortunately, off of $20. So not ideal. We are seeing, unfortunately, a little bounce with AMC. Hopefully it won't be too severe. And Marco Sal says BTC USD wants me to look at Bitcoin. And James Wood says you get the option to convert 3-to-1 cashless or more, depending ratio to convert cashless is determined when Rumble calls the warrants. Okay, I see. So maybe, yeah, I see what you're saying. I get it. Okay. So you're saying that, if you have a bunch of the warrants, then you could convert them on a cashless basis. Yeah, maybe. So maybe it could become a good deal then, potentially. But I'll look into that a little bit more. It could be good. So now we're looking at, we'll pull up DWAC here. We'll move AMC back down over around here. I wish we had a couple more charts, and we really could. We could add more grids into this, but then it just gets a little bit too tiny probably for some people. I have a big screen right here, but on the stream, it's a slightly lower quality. It's not quite as visible, and you can't probably read some of the ticker symbols that we've got. So we'll keep it like this, but it looks like DWAC is breaking that $80 support level. It tried to bounce off of it. It bounced off of it once. Now it's breaking through. It makes me wonder what's going on with Sundial, if it's following the same pattern. Fortunately not. Fortunately, Sundial is still holding above its support of 53 cents. An abstract Artemis says, I like the stream while the ad is playing. Oh, nice. So the initial ad that plays abstract throws in his like, I appreciate that, man. You already know you're going to like it. So yeah, you may as well click the like button then. I appreciate that. Thank you, Artemis, or abstract Artemis, however you want it, man. So we're looking at Sundial. Hopefully we don't drop below 53 cents, right? Hopefully we don't follow DWAC on the way down, which notably DWAC is still green, 1.7%. And we will pull back up some of these cryptos. some of these cryptos we've got to pull up just to take a peek, just a little gander at what's going on in the crypto markets. It looks like we're relatively green, right? Most of the cryptos are seeing a decent amount of green, potentially as, people are worried about inflation and whatnot. Maybe they're expecting that we'll see some higher inflation numbers in the near future, right? That's a big reason why people flock into crypto. We'll see if that actually happens, right? If we actually get a big increase in cryptos, if we see high inflation, or maybe it's more of a buy the rumor, sell the news situation. We'll see what happens with these cryptos, but it looks like they're relatively stable at these support levels that they've fallen to. So they're not near their all-time highs. Bitcoin's sitting around 42,500. Fortunately, it looks like it's on the rise from its $40,000 support level. Ethereum at 3,200, also green on the day, up 3%. So we're looking at good stuff. Cryptos are potentially on their way back. They're potentially becoming a hot commodity again. We'll see what happens if that's the case. Dogecoin, Dogecoin, it's been tough for. We've been on a bumpy ride with Dogecoin, even though Elon Musk started accepting it at his Tesla merch shop. We still aren't near, the all-time highs of Dogecoin or anywhere close to them. But we'll pull up the Tesla store. We'll pull up the Tesla store and see what we've got for Dogecoin. So, if we pull up the Tesla shop, we can look at merch, and it's actually pretty cool stuff, what you can buy for Tesla, or for Dogecoin, right? So if we look just at, let's pull up the lifestyle stuff, yeah. So here we go. So we'll pull up the Tesla shop, and you can see they've got a couple of things selling for Doge. So they've got the Giga Texas belt buckle selling for 835 Doge. You can only buy it with Dogecoin, right? You can't even buy it for cash. So really cool. They've also got this cyber whistle for 300 Doge, and it's out of stock, unfortunately. The coolest thing I think that they've got that they're selling for Doge is actually, if we could get back to the shop, it's actually this. Where did it go? The lifestyle, and then this. Also out of stock, the Cyber Quad for kids. So look at this. It's basically a little ATV capped at 10 miles per hour, 15. Yeah, top speed of 10 miles per hour. It's capped at. Costs 12,000 Doge, so around $2,400 if you wanted to buy this at the current prices. I believe maybe a little bit cheaper than that now that Doge has gotten cheaper, but it's pretty darn cool. So it looks interesting. It's obviously fairly small, but still very cool that you can buy this kind of stuff in only Doge. I mean, that's the only way to get it. If you're on the Tesla shop, that's the only way. Okay, and James Wood thinks that the CFVI warrants will pull back under $3 sometime soon. Yeah, we'll see. We'll see what happens with it. It looks like DWAC is unfortunately continuing to trend down a little bit. Sundial hopefully will regain some support at the 53-cent mark. We'll see what happens. And overall, the markets are green. But once again, it seems like a lot of the green is potentially in tech, right? If you look, the QQQ is up 1.3%. The Russell's is up. It's up 1.1% though, so not as much green in the overall markets as there are in the tech stocks. So we'll see what happens with them. Hopefully they can come back. But a lot of these small market cap stocks have been seeing a ton of pain lately. In fact, if you look at the Russells from the highs to the lows, we can actually do a comparison and see how much of a percentage decrease they've seen. Fallen about 15%, about 16% actually. So a fairly significant decrease in these smaller market cap stocks. It's really been a rough time ever since November for some of these small market cap stocks when we were reaching higher valuations on some of them, but then we just got crushed to yearly lows come this year, right? Come 2022, we looked like we might have a little bit of a green start to the year, and then we just got decimated over the following week. So, that's unfortunate. I don't think that we'll, I don't know how much further we'll drop. Hopefully not too much further. But I don't think that we'll maintain this downwards trajectory forever, right? I don't think these growth companies are going bankrupt anytime soon. There are, obviously some companies do go bankrupt, but not all companies, right? A lot of these growth companies are companies that will be very prominent in the future, and we'll have to see which ones, right? It's not a guarantee that every growth company is going to do incredibly well. Obviously, some failed, right? Some have ideas that just never quite pan out. But as of right now, for the reason why they're falling, it's looking like people are just taking a risk-off position. They want to get into maybe some tech stocks, although it looks like tech stocks have been falling lately. And, maybe people are flocking to cash. I don't know why they would flock to cash when we're expecting big inflation, right? It would probably make more sense to put some money in the stock market. Some people are, I will say, flocking into gold, right? Gold is actually the biggest asset out there. Let's see if we can pull that up. So look at this. So we've got assets ranked by market cap. And here it is. Gold is the number one asset, right? The biggest asset in the world, top assets by market cap. It includes stocks and cryptos and everything. So gold has an $11 trillion market cap. And then behind gold is Apple at $2.75 trillion. Then we've got Microsoft. Then we've got this Saudi, I believe, oil producer, Saudi Aramco. Then it's Google, then Amazon, then Silver. Silver's a $1.3 trillion market cap. That could certainly stand to get a little bit of an increase. We've got Tesla at $1 trillion, Facebook at $900 billion, then Bitcoin at $800 billion. So no longer in the $1 trillion club for Bitcoin, but maybe we'll see it bounce back up there. If it could get above 50,000, that should do it. Maybe a couple thousand above 50, it would be necessary, but we'll see what happens. A lot of the money may have been flowing into gold, right? If gold is the largest market cap, and over the past couple of months, right, since late November, you've seen gold increasing by even the small amount that it has. So from around 165, which is where it was near its lows, to its highs, it's about a 4% increase. Not the most dramatic, but when you're looking at the largest asset class or largest asset in the world by market cap of $11 trillion, a 4% increase is pretty darn significant. So some of the money might have been flowing into metals. Obviously, the gold markets are very tough to move with that large of a market cap. And Abstract says, I'm sitting on cash that my wife won't let me invest. My wife hates the idea, mostly because I started investing without talking to her. Oh, without talking to the wife. That's a tough situation. Some having some cash makes sense though. Now, for those of you who are interested in sitting on cash and collecting, a decent interest rate, I will pull up how I like to sit on cash right here. If you guys are interested, then you can partake in this method as well, because it actually earns a fairly decent interest rate. Let me pull this up real quick. Let me turn on privacy mode and whatnot. But all right, so here I will pull up on the main cam how I like to sit on cash, and it's actually with Yotta Bank, Yotta Bank. And this is just the demo mode, so it doesn't show you what I've actually got. But essentially, it's a lottery service, right? So you get these tickets. You can win a jackpot prize, of up to $10 million. I'll pull up, how much you can win if you get these tickets. But every deposit of $25, every $25 that you have in your account ends up adding up to about, one ticket per week. So every $25 adds up to an extra ticket that you get in a lottery every week, and you can win these prizes, right? If you just get the Powerball, you get 10 cents. 3 balls, you get 15 cents. 1 ball in the Powerball is 15, and it scrolls all the way up. If you get all of the balls except the Powerball, you get a free Tesla. All of the balls and the Powerball, you get $10 million. 10,000 for just 5 right numbers and the Powerball. So it's a pretty interesting way to get this to get some extra interest off of your cash, right? Because every week you do end up getting some money, right? We've only rolled 3 balls thus far this week, and I've already won 15 cents. And typically towards the end of the week, you end up seeing much more than the initial ones, right? Because you get the numbers, they essentially compound, right? You get more chances for these tickets, which I'll pull up right here, to be 3s or 4s or whatnot. So you have a lot more potential to earn some interest. I've earned decent interest with this banking app lately, and if you guys are interested, then you can always use my referral code to join the thing, right? If you use the referral code Rob Almazy, there's a link in the description. It should be in the description of the stream. If you use the referral code Rob Almazy, you get 100 free tickets when you sign up. So you get 100 chances to win that 10 million. So it's a potential thing to think about if you're sitting on cash. It's a no risk kind of thing, right? It's FDIC insured and all that. So that's a potential thing that you can do if you're interested. And we've got a pool. Well, we don't have a pool yet, but we can pool our tickets. We'll eventually figure that out, right? So we'll eventually work on that. But that's just something if you guys are interested in making some extra money while sitting on cash. That's where I keep my cash, right? I think it's a pretty high interest paying thing, and there's the chance, every week to win that 10 million. So it keeps me from wanting to buy lottery tickets where you just throw your money in and then it disappears, right? I'd much rather save the money and get a lottery ticket every week than just spend the money that I've gotten there on lottery tickets once and almost certainly lose money, right? In this situation, I'm just gaining money every week, so it's a pretty cool system. I'm a big fan of the bank. But that's Yotta Bank for you, YOTTA Bank. So it's just an app you can get on your phone if you're interested. It's pretty cool. Now Sundial, it looks like, is starting to see some green. We're starting to move back up in Sundial stock. Look at that, up 3% on the day. Where is DWAC? We'll pull up DWAC and see what we've got. So DWAC is still green on the day technically from close, but we have seen some red throughout the course of the day, unfortunately breaking us down below 80 bucks. Understandably so, right? We struggled with that yesterday also. We broke below it multiple times, right, in the beginning and towards the end of the day. So understandable. Hopefully we'll get back up there. And NJ says Yoda is thumbs up. He likes Yoda. Yeah, we'll definitely get a pool going, right, for people who are in the stream and whatnot, because you can pool your tickets, right? You can all put your tickets in the same pool and then share the prizes based on how many tickets you have in the pool and whatnot. So we'll have to set that up at some point. I've yet to do that, but I will work on that. This weekend, I've got a lot of stuff to work on, so I'll do it this weekend. How about that? We'll get that done. So let's see what we've got on. Okay. It's real unfortunate, guys. Unfortunately, every now and then I look at the YouTube comments and there are so many scams out there. A lot of people are trying to scam. I don't know why they always use Bitcoin to do it, but they always say, "Oh, my Bitcoin investment, I'm making $27,000 a week with Miss Loretta James, and you just need to click this link, and here's her WhatsApp." And sometimes they're real convoluted too, right? Sometimes they get pretty intricate, and they've got people responding to the comments, pretending to be interested users potentially. And it's just a real convoluted thing, and I do my best to remove those comments, but sometimes it doesn't work, unfortunately. So we'll see. We'll see what we can do about that. Hopefully, we can get rid of a lot of those comments. And it looks like my stream on Rumble may have stopped for some reason. Not sure why, but it may have stopped. Weird. Anyways, no, it still says it's live. I don't know. I'll have to check the footage at the end of this. But Abstract asks, do you ever check my message on IG? I did. That was a very good song. I like that song. I listened to, I forget what it was called, but it was like High Life or something like that. It was good. Excuse me. Yeah, I like that. That was good. It was a good one. I would play it on stream if that was loud, but I don't think YouTube would like that very much. I don't think that's the kind of stuff I can play on YouTube without YouTube taking some kind of action against it. So it was good though, man. I liked it. So it is 10:34. It looks like we've been running this thing a little bit longer than I meant to. We got distracted. So other than that, guys, that was the stream for the day. Hopefully y'all will feel free to join us back tomorrow at 9 o'clock. That's the tradition, right? Every morning at 9 we do these streams. So feel free to join back at 9 tomorrow. We always have a great community on YouTube. We're looking to grow the community on Rumble as well. So anyone watching on Rumble, thank you very much. Hopefully you enjoyed the stream. Hopefully this provides some interest to your morning, some market news, and hopefully you have fun in the chat watching the charts and all that. So other than that, guys, have a great day. I'll see you tomorrow. Tomorrow is Friday, so the last day of the trading week. So hopefully it's a green one, right? Hopefully we see a green end to the week. There is supposed to be some significant snowfall in my area. Hopefully, the power and the internet won't be affected by that. But we'll see. We'll see what happens with it. So other than that, guys, hopefully we'll see you tomorrow, as long as there's no, adverse weather conditions affecting the ability to stream. But we'll see you tomorrow at 9. And other than that, have a great day. Bye, guys.